All right. Welcome everyone to LeapMeet 33, where we are going to go over the trade log for August 2021 and also have a Q&A session at the end of it. August is not done yet. We still have 2 more trading days left, but since we are almost at the month end, it would be a good time to just go over the trade log, see what we have done so far that is working out, what we have done that is not working out, what we could do better, and what we should do more of. So basically, that is the whole reason for this meeting. And also one of the reason we do this meeting is because I want you guys to understand the importance of having a detailed trade log and how you can analyze this trade log at the end of at the end of the month, at the end of the week, just to go over the trades you have taken so far and how it can benefit you and how it can make you a better trader, basically. So that is the whole reason we do this exercise. I have kept my detailed trade log for past 6-7 years about now. So, and I do this exercise myself, even when there was no trader or when it was just me trading myself. I manage like about 6 or 7 different accounts. I have TradeLog. I have kept TradeLog for every single account, and I do this exercise for every single one of them because it shows you a lot of mistakes that you have done. Because let's just say you take a trade right now, you make a mistake, you recognize that mistake, but by the end of the month, you're not going to remember it. You're going to completely forget about that trade or that trades or that bad week you have had. Like in a month or two, you're going to forget about it. So if you don't remember and keep track of the mistakes that you have made, how do you improve and correct those mistakes? And remember, trading is a journey. It's a marathon. Everybody says that, and it's true. It's a marathon. It's not a sprint. So in order for you to last long in this game, and what you need to aim for is the continuous improvement. Like even after almost 8 years of trading, I am not perfect, but I have corrected so many mistakes that I was making before that I'm a better trader now. But I'm not perfect. I don't have 100% success rate, and nobody does. And nobody's perfect. No, if someone tells you that I am the best trader ever and I never make any mistakes, and they're lying to you. Like yeah. So basically, so I still do this to this date. I go back. Now I make less and less mistakes. But when you are starting your own trading journey and your goal is, if your goal is to do this full time and have this as the main source of income, or even like a reliable supplement source of income, you should do this. It will help you become a better trader and get to your goal faster just by doing this and recognizing the mistakes you have made and actively correcting those. So that is the whole point of doing this exercise. All right, so let's go ahead and get started with August. So first week of August was almost near perfect. Only Friday was a slow, choppy day. We took one trade. We recognized that the importance and a characteristic of a successful trader is to recognize when to trade and when to put the hammer down and trade hard and when to just walk away and not do anything. If you don't do that, if you are quote unquote addicted to trading, that you completely ignore the market environment, what's happening around you, what's happening in the market, what's happening in the world, you just have to trade every day. And you just have to aim for that 500 or whatever your daily goal that you set for yourself. Then you are setting yourself up for a failure. I say this over and over again in our chat room too. Like, you don't have to trade every day to be a profitable trader. So when you look at week one, it was fantastic. For first 4 days, everything was running, everything was doing the way we were expecting it to do. We made some good gains. Still 85, 60, 70% return rate on your investment. And then comes Friday, where everything slowed down. Everything was choppy, trading in a very tight range, as I noted here in my comments, like slow, choppy day, and market was trading sideways. And as a trader, I recognized that personally, and I was like, okay, you know what? We're not going to trade today. We tried one trade early in the morning for Roku, and it just didn't work out. It was a lotto play. If you have a small account, you shouldn't be trading lottos anyways. So, but we did, and it didn't work out. So that was just one bad trade. An entire week, everything else was green. And another important thing that I want you to notice in this trade log of mine is and ours is basically the first or second exit after entry. In order for you to be a successful and consistently profitable trader, you have to take profit consistently. You cannot wait for home run. You cannot hope for 50, 60, 70% return on your investment every single time, because that is just unrealistic. And that is what I want you to notice here too in this column, and not just for this week, throughout the entire month, even prior trade logs of ours, that our first exit is almost always like around anywhere between 20 to 40%. So 17, 12, depending on how fast it's moving. 24, 21. Sometimes you get lucky, it moves real fast and you get 50%, but more, it's around 20 to 30%. And sometimes, like I said, and I tell this to everybody who asks me, if you are taking profit consistently, and if you're consistently taking good measured trades, there will be time where you will get lucky. And when you do get lucky, you're going to end up making 60%, 50% return on your investment. And that luck is not purely a luck. That luck, you got lucky because one, you are in that position. If you didn't take that trade, you wouldn't be lucky. And two, because you followed your rules and you have been consistently taking profit. And a lot of time when you like, it just runs and it just works out. But in order for that to happen, you have to be in the trade first. So that was very important point. And that is very important point. I want you to notice that, and it's almost always like that. Like, if you see through this column, that is what you will find. And it's another one of the important points I want to stress. And then comes week two. First 2 days, fantastic, worked out really great. And then market starts to like slow down, get choppy, and it just started doing this weird stuff, consolidation. We have been in consolidation phase through almost entire August. So week 2, week 3, even week 4, all those 3 weeks were consolidation phase in the market. But usually Monday and Tuesday, it has been a pattern where it makes significant moves in either direction. At least some stocks do. And that's what happened during the week too. So again, we put the hammer down, we take like 6 trades a day. And then comes Wednesday, market started to slow down. And then, so we slowed down. We started only taking 1 or 2 trades. And Wednesday was a particularly bad day because we took 2 trades that day. Roku puts didn't work out. should have worked out, but it didn't. It started bouncing real hard. And we recognized that. We used our stop losses, got out with like about 11% loss, not a big deal. Google, again, actually Google we exited on 13th, so on Friday, but Google ran on Friday, and our exit was 7.5, but the first exit was 7.45. So in the first and second exit column, we put 7.5, and that is why it's 25% loss. But the prices went up to 1050, and we exited at 1050 the rest of the position. But just as a honest logging, and for myself personally, we put it first and second exit at 7.5 instead of 10.5, and declare this a winner. We declared it as a loser because I wanted myself to be accountable and know that I made a mistake. I should have been a little bit more patient with Google, especially considering the fact how well it's been doing. So I underestimated it that day, but again, the week was getting choppy, so no regrets, follow the plan, and it is what it is, right? So, but in hindsight, should have waited. But hindsight trading, as I always say, is the easiest one out there. So you shoulda, coulda, woulda never works. And then come Thursday and Friday, FB was running, so we just paid attention to that and kind of worked out for us. But slow week after the first 2 days, it was a slow week, and we just let it go. And we took one or two trades that that presented itself in the morning, and then that's about it. We didn't force trade, otherwise it could have been more bloody. And like I said earlier, recognizing when to trade hard and when to just let it be is one of the most important characteristic you can have as a successful trader. To repeat that point again, because it's a very, very, very important. Like 90% of the traders that fail, you will hear this numbers everywhere, that 90% of the traders fail and quit in the market, but they do so because they make this common mistake. And one of those common mistake is over trading, getting quote unquote addicted to trading, that you just ignore what market is doing, what it's supposed to be doing, what you should be doing in that market condition. You ignore everything. You just have to trade. And if you are one of those people, it might be time to check, like check yourself and your behavior. And if you are one of those people, then maybe you need to remind yourself that you don't have to trade every day to be a profitable trader. It's very, very, very important point, and that is why I am repeating it, because I've seen people make these mistakes a lot of time. They just want to make money, and it's a process. You can't rush the process, and you have to follow the rules. Anyway, so week 2 was decent. We got like about 3 losing trades, but nothing bad overall. We follow the stop losses, worked out quite great. Comes week 3, another one of those slow, choppy week. Monday was great. We make some good trades. We put the hammer down, some great 152% winner, 54, 64, 42 overall. Comes Tuesday, choppy, sideways, slow day, nothing happened. Wednesday, same thing. So this Google trade that we took on Tuesday, week 3, should have followed the stop losses, but market Google just dropped like drastically and then never recovered. But if you were to be in it, one of the things would be follow your stop losses. So I'm going to put this note for myself. And then after this 2 slow, choppy days, it started getting better. We got some good trades again in Snap, Shop, FP, Nvidia, and all of those. And then Friday was good too. We took about 3 trades, all of them worked out. So overall, good risk to return ratio. We were not careless and took too much risk. We played the market how it was presenting it, us with the opportunities. These 2 trades were, these 2 days when it was slow, we didn't trade much. And then when it got better, we started trading again. Come week 4, last week, fantastic week for all of us. We did, we had some great, trades, and entire week was great. Market was running really nicely. Market was running really nicely, and we had some good trades. The only mistake we made was Snap, and that wasn't that big of a trade. The calls weren't as expensive, so I just let it go. It is what it is. Should have followed stop losses, but a lot of time when a trade is like the entire trade size is lower than my accepted loss size, I usually don't set stop losses personally for me because my risk tolerance is higher. But you should, because it's very important to have stop losses in place. But yeah, so week 4, fantastic. We did not make any mistakes. We only have 1 trade open here, and that was about it. And that's it. Great. Some quick trades, as you can see, again, 20%, 40%, 50%, 30%. Market wasn't doing great. So week like this are the gifts. And this is when you run. And this is when you put the hammer down and start trading and start doing taking a little bit extra risk when the entire overall market is doing great. Entire overall market is running. So that was it for August. We still have 2 more days left, but again, I want to point out another thing. Give me a minute. And okay, so sorry about that. I lost my train of thoughts. But overall, great month so far. We have taken about 75 trades. 68 of those were winning trades, about 90% success rate so far, and about 9% 9% failures. But when 90% of the trades that you take works out, and you only have about 10% of the failures, if you manage your risk right, if you do everything you're supposed to be doing and follow the rules, there is no way you cannot make money in this market because you are managing your risk really greatly. We have one of the members here, Bachubhai Patel, and he has been making great progress last week. Granted that it was a great week, but growing your $25,000 account to like almost $8,000 by $8,000 and taking it to $33,000 in just 1 week shows you that if you do it right, if you follow your rules and risk tolerance and everything else, then there is no way you won't make money in this market. All you have to do is basically how to trade, and when to exit, and when to follow your stop losses, and when not to trade. Another important thing, as we discussed, when not to trade is just as important. So if you do all those things right, then it's going to work out. And that shows from this column right here. Again, another thing that I want you guys to know. So this column, and I've said this again, and this is for basically for new members. But what this column present is basically if you have a $10,000 account, and then you shouldn't be taking 14,000, I mean, 1,400, $1,000, 1,500, 1,200, 1,200. You shouldn't be taking those trades because your account is simply not equipped to handle that kind of stress and risk, because one bad trade and you're going to wipe out 20% of your account. And that is just madness. So this basically column shows you that if you have a $10,000 account, the maximum trade size that you should be taking is 700. And if you do that, if you're having a good week, you can make exception here and there, right? If you're profitable for the week, and then you can make exception and take another $1,000 trade instead of 700 max size. But for overall, for most part, even if you take only those trades, at the end of the day, you're gonna walk away with $5,800. And let's just say, even if you say walk away with $3,000 on a $10,000 account, that's 30% growth in your account size in just a month. And that shows you that you can grow any account if you are patient enough and don't risk too much, don't get greedy, and follow rules. That is, and most people that fails don't respect these rules and don't respect all these things that we're talking about. They just want to make money quickly and buy Lambos and get rich quick, and whatever their goal is, they just want to get there in a month. Or, oh, we're paying you $150, so I better make that as fast as possible. I better make $5,000 as fast as possible because we're paying you $150. That is not how it works. It's not about you take one trade, literally one trade entire month, and you're going to make that $150 back, just one trade. And you sit on your hands entire month and just learn. That is still time and money well spent, and nothing comes out of your pocket. But most people, the greed is such a strong factor that they just want to be rich and they just want to be successful and make thousands of dollars right away. Nobody wants to take patience. Nobody wants to practice, follow rules. No, they just want to make those thousands of dollars right when they started. And that is like saying, oh, it's my first year of medical college and I want to do a heart transplant or something crazy like that. No, you have to start smaller. You have to start with smaller procedure and work your way. Maybe after 6 or 7 years, you can do the heart transplant. You're not going to do it right away in your first year of college just because you were a medical student now, or you started holding scalpel, right? So it's just like that with anything else in your life. You have to practice, you have to get better, you have to start slow. But most people can't grasp this concept. They just want to get there right away. Instant gratification is a flaw in our generation. Just because they spend $150, for example, I have to make $5,000. I have to make most of it. But they don't think the way, like, if I keep on doing it for a year, then I will be able to make this as a main source of income, and then I will slowly start cutting back other work and stuff like that. Nobody has long-term plan. Everybody wants instant gratification, and that's why they fail. But anyway, some of the some of the improvement we can make just from this month is basically one that is reoccurring and need to get better is expecting and executing stop losses. And that's the only one I can see from this month, and maybe be more patient with some of the positions, especially, for example, Google. If it's doing great, give it a little bit more time. But that's all I can see from this month's trade log. It's been a fantastic month for us personally, and I personally know some of the members are in 10 to 15,000 range for the profit. So it has been great for some of them as well that I know of, but I hope that it's been a great month for all of you guys, everybody. And if not, ask question. We have 2020 Troopers 2020 at least once a month, where we talk with you guys one-on-one personally on a Zoom call, where we will answer all of your questions. Take advantage of those, because that is how you will get like it, that is how you will get to know us, we will get to know you, and more importantly, we will be able to answer your questions one-on-one live on Zoom. So take advantage of it. It doesn't cost you anything. And even if you don't have any questions, just come online, show us your trade log, how you're doing, and then maybe there's 1 or 2 points that we can figure out that you can improve on, or 1 or 2 rules that, or 1 or 2 mistakes that you made that we can eliminate for you to be a better trader. Take advantage of those. Those are very important. But yeah, hopefully you guys were profitable this month, and that's it. That's where our trade log review ends for this month. We still have 2 days left, so hopefully we'll be able to bring this 90% to about 93%. I don't know, 94%. That will be fantastic. So let's see what happens. But I will yield the floor now for questions. If you guys have any questions, feel free to so feel free to ask those questions, so we'll be able to answer them. Put it in the chat, unmute yourself. Either one works. Sid, so for stop loss, it varies. I don't want to post stop loss level when I send the alert, is just basically because a lot of time it depends on the stock itself. Like, for example, Shop, day before yesterday or before that, it went down to about which trade was it? I think it was this one, this trade, for example, 1550, or I think it was this 1550, and it went down 1540, and it went down to like about $6, and before even the day end, it bounced right back up to that level again. So for volatile stock like that, you have to give it some time and a lot of room. And then if you're trading Snap or Apple or Crowd, it's a totally different story, because those are like, a lot of time, those are like slower moving stocks. So once they drop 50%, there is almost never chance, like there is no chance that it would recover back to those level again, especially if it's expiring the same week. So stop loss level varies. That's why I don't want to give it, because it also, the market has been super volatile lately. Even when it's consolidating sideways, names like Google, Shop, Amazon has been going up and down quite a bit, in a range, but quite a bit. Like, that range is not super tight. So stop loss level basically will rely on you and how much risk you're willing to take. So before you enter in any trade, ask yourself, how much money I'm willing to lose on this one, and define your resistance and support level. And that's how we have a great webinar on risk management and how to set the stop loss and all that. Please watch that webinar. It will clear a lot of things up for you. But if you have any questions after that, please do ask. But it's not straightforward, like, okay, if it drops 50%, we're gonna get out. Because a lot of times, and you have seen this over and over and over again, that where after I enter, it does drop 50% and then recover right back up. So it's hard for us to give you stop loss level when we are entering in trade, because it's volatile. Exactly. It happened with Amazon as well. It went down and then it shot right back up. So the market is ever changing, the landscape is changing, and the way stock is behaving has a lot to do with like the stop loss that you set. So it's not straightforward is all I'm trying to say, for us to just give you when we send out an alert. That you have to decide on yourself. And also, as you can see, after 8 years of trading, a lot of time I still miss on stop losses. So stop losses is one topic and one skill that you will develop with time. But one thing you can do as a beginner, especially if you have a smaller account, is have a rule of thumb, like, okay, if it drops 60%, I'm getting out no matter what. Even if it goes up, I don't care. I'm getting out at 60%. Just set a rule of thumb, and that will save you a lot of pain. But stop loss is a topic that you will probably most likely learn and get better at with experience and as time passes more. Any other questions? All right, guys. Yes, please feel free to unmute yourself if you have any questions. All right, if you guys have no other question, we will go ahead and end our meeting here. Thank you everyone for joining us on Sunday and taking time out of your busy schedule to come and meet with us here. So we really appreciate it, and we'll see you on Monday. Have a great weekend, everyone. Later.